Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Apple report for Tuesday, May 16th, 2023. Before I click on the charts, as usual, I want to encourage you to please click like each and every time you watch the Apple report. It helps us out a great deal in being found on YouTube. And also become a Wicked Stocks YouTube channel subscriber. It'll provide you notification each and every time new content has been uploaded for your viewing. And last but not least, check out wickedstocks.com, where we offer a full assortment of weekly and daily analytical videos, just like the daily Apple report in the daily Triple Q, the daily SPY, weekly analysis in the S&P 500, NASDAQ 100, the long bond ETF, the TLT, and two individual stock picks every week that cover the 2 to 3 week to 2 to 3 month time horizons for near-term and longer-term investors. Not longer-term, but more mid-term investors. All for a very reasonable subscription price. And we offer a 5-day free trial with that. So if you don't like what you see after a few days, you can cancel your subscription at no cost to you. So let's take a look at the charts. Reminder that the big picture still, after 2 weeks, remains positive, bullish, a little less than 2 weeks actually, above 171.02. Long-term buy signal still in play above 171.02. Lots of hesitation here, but this can happen. But nonetheless, holding above 171.02, longer-term bullish continuation to 182.94 by the end of June still, yes, and that 218.37 long-term channel top over the next full year of trade or sooner. Sooner would begin to present itself more clearly if we were to close over the next couple of months above 182.94. So 171.02 represents a breakout to the upside, anticipating longer-term bullish continuation as we move through the rest of the year above 171.02. Now, talking upside for this is kind of a big picture. Let me scroll to this one, 176.13. That level stands out as session containment. I don't know if we'll see that today, but if we push or open above 174.73, 176.13 is likely. I don't like to, that is just a minor point. It's not an intraday pivot point, but it does have pivot point qualities, FYI. So if we push through 174.73, you should expect 176.13. In fact, I think this is pretty accurate. All the minor points really lack clear session or intraday pivot point qualities. They're all very carefully chosen, but it really is a 171.02 floor, not only for the day, not only for the week, but through the month and through the rest of the year, and also 176.13 ceiling that may not be reached today, but if we do push through 174.73, I think you should expect it. And closing above 176.13, 180.29 expected within several days. This channel top is rising at 180.29 and will converge next week with the 182.94 all-time high anyway. So you could say that closing above 176.13, say over the next couple of days, should by the end of next week yield that 182.94 all-time high from January of 22. Where we can top out on at least a weekly, possibly monthly basis. So, I don't know if there's anything else to flesh out here. I will say that if you're a 3 to 5 day swing trader, you can buy 171.02 and sell wrong chart again, 176.13 level. You can see it here over actually on the right, the support and resistance. That is the 3 to 5 day swing trade. If you're talking the next 2 to 3 week position trade, it's buying 171.02 and holding out for 182.94. So, your 3 to 5 day swing trade, if you're into options, if we're testing 171.02, you could reach for 176, 177 out of the money calls that don't expire for at least a week. Or if you're more of a 2 to 3 week, 3 to 5 week position trade, you could you could reach for 182 or 183 out of the money calls that don't expire for at least a month. I'd go a couple of months out on that, so forth and so on. Now, as for the downside, if we do close below 170.78, you can see that here. That is the daily chart version of the weekly channel top at 171.02, 170.78. That doesn't look good. We could see the market continue to show weakness later in the week, but I am not convinced of a complete head fake up here. in terms of then expecting a market reversal as we move south, perhaps into June, unless we close at or below 169.31. That is a 1% violation of this long-term channel top. So breaking back below 171.02 by a 1% margin, 169.31 or lower, I think does seal the deal on what would be a failed long-term buy signal. That is, in essence, a valid sign of weakness. As we move through the rest of the week, I would expect 167.02 within just a couple of days. And over the next 2 to 3 to 5 weeks, 157.87 if we close 169.31 or lower. And I think we could even fall into the upper 140s. There's another channel bottom here that comes in at the upper 140s within maybe a couple of months of closing back below 171.02. But we're not there. We're still stable to bullish as we move into later year above 171.02. And I think that pretty much outlines it for Tuesday's Apple Report. I'll be back again tomorrow with Wednesdays. Please click like, please subscribe to the channel, and check out wickedstocks.com. You have a nice evening.